Hello, everybody. This is Noah Rosenblatt, and I am from Urban Digs, and I'm here to give you a week 4 of this coronavirus Manhattan market report update and kind of zone in on what's going on with Manhattan real estate on a more granular level. And I've been doing this week by week, and agents seem to love it. I keep getting asked to do it again, and so here it is. So this is your 4th week now. I'm going to try to reference stats from the previous few weeks so that you guys have an ongoing idea of where we're going here. Let's just start with the big story. The big story is inventory is going down. All right, and inventory is going down. It's at 5604 right now. When we did this 2 weeks ago, it was at 6282. When we did it last week, it was at 5882. And now it's at 5604. This is a combination of a lot less stuff coming on the market. Usually we get about 1,800 listings that come on the market in March. We had about 925. In April, we usually get around 2,000 listings that come on the market. And time will tell what we get, but we're probably not going to get anywhere near that. So we got less stuff coming on the market, and we also have a lot of stuff going off market. So those are the two forces that are affecting supply. We're going to come out of this with a much lower inventory number, and that's one high level point to make sure your buyers are aware of. Buyers, they might have some leverage, they might have some negotiability. They're going to have discounts. No one's denying that, but they're not going to have the options. They're going to have less inventory to choose from, and that's something they didn't have before we came in this. They had a lot of options for a while. They're not going to have a lot of options. They're going to have less options. And not only that, but if they're going to be putting in bids 15, 20, 25% below where we were before this crisis, they're going to find a lot of sellers are not so willing to hit that bid. So that there's two things that buyers are going to have to understand that's going to create a very thinly traded, low volume period. And we're in the midst of that period. We're already a couple of weeks in. We don't know how long it's going to be, but it's going to be a thinly traded, low volume period where basically those sellers that have to sell and they're forced to sell or they want to sell, they're going to be hitting the bid that is acceptable to them. So buyers need to understand that not every seller is in that position. So they may encounter situations where they put in a bid 20% below and they think that's where the market is, and the seller says no. And the seller has every right to do that. They could sell when they want to sell. So there might be some wide gaps in bid-ask spreads that buyers are frustrated that sellers aren't coming down to, but that's just the nature of what's going on here. Sellers seem to be, for the most part, biding their time. Not all, but a lot seem to be biding their time to get through this. Pending sales, we're at 2549. We were 2 weeks ago at 2644. Last week we were at 2569. So we're at 2549. That's not bad. So enough deals are being signed that this is declining, but it's not declining fast. We're seeing a bigger pace of decline in inventory and supply than we are seeing in pending sales. And that is what's causing our market pulse to rise, right? This market barometer is rising not because the market's getting stronger, but because inventory levels are falling at an unusual pace right now. And that's giving fewer options to buyers. And that dynamic is now leveling the playing field in some respect. And it's making it look like the market's getting better, but it's not. It's just a dwindling inventory scenario. And buyers are going to have to deal with that. Nothing to do with price action. Okay, let's now go to the dashboard and do a couple of weekly checks. When I did this 3 weeks ago, I did an open house check. When I did an open house check to start out this crisis, we had 1,671 open houses. That was 3 weeks ago. When I did it 2 weeks ago, we had 264 open houses at this point in time on Friday. When I did it last week, we had 53. And as you can see now, we got 21. So that's now following that natural progression that you would expect since Governor Cuomo put in the no showings order for agents to follow. All right. When I do this on a weekly basis, how many listings came active in the last week? Oh, excuse me. Let me change that open house. 82. Okay. When I did this 2 weeks ago, 138 listings came on the market on a weekly basis. And when I did it last week, it was 80 listings that came on the market on a weekly basis. And now we're at 82. So we're bottoming out right there. We're seeing about the pace of weekly new listings. It looks like it's going to be in the 80s. Let's see how long it stands for. Let's see if it goes lower. This is something we want to check. Okay. Are sellers listing in this environment? Let's change this to contract signed over the last week. Let's look at production. And we got 88. This is not bad. A lot of these probably are deals that were residual and from a couple of weeks ago, but still, we're 2 weeks into this crisis, 88 deals. That is not bad at all. That's probably why pending sales is not falling so fast, is we're still putting a decent amount of contracts in, given the fact that so few inventory is coming on. So let's see where this goes in the next couple of weeks. 2 weeks ago, this number was at 136. Last week, this number was at 74. Okay, so we're bouncing up from last week's number. That's a decent sign. The market's still functioning, and that's what we want. Finally, we're going to do off market, and we'll end it there. In the last week, we took 270 listings off the market. That compares to 424 listings that came off 2 weeks ago and 409 listings that came off last Friday. So we got less listings coming off the market, more listings coming on the market, more listings in contract from last week, et cetera, et cetera. So this is an interesting time, an interesting dynamic. Again, we have a thinly low volume trading environment. So we're not going to get price discovery on these deals that are happening right now for at least 3, 4, 5 months. For them to close and become public record with Acris. So we're in the dark here, so to speak. We're looking at inventory trends to see what's going on. But one high level thing to understand is, yes, demand is down. No one's denying that. But so is inventory. And buyers are going to have to deal with a very, very different market when it comes to supply and options, as well as sellers that are willing to go and hit that large discounted bid. So that's what we're looking for. That's the kind of information we're trying to get out. And once we do get that out, we're going to send it to you here on Urban Digs and in our podcasts. Until then, we're heading into a weekend. Thank you guys so much for being great listeners, a great audience. You're sending in great questions. I hope these are helpful, and stay safe, be well. And again, thank you to all the first responders and everyone that's helping everyone. It's really, you're doing an amazing job. Thank you so much, and we'll catch you next week. Bye-bye.